Good day, everyone. Welcome to the weekly note of GTC Traders. This is a feature we do each week, as you can tell if you click on the little category for the GTC weekly note. This is something that we do each week. If you are new, I am the senior partner of a separate private proprietary firm, and we decided, hey, how about we put our weekly note up? We're not by any means the only one that does a weekly note. This is something that's very common among many firms, weekly note or a daily note. And we thought, hey, how about we just make this real easy on ourselves? How about we just copy and paste sort of our weekly note from our private proprietary firm and put it over here on GTC Traders. So that is what we do. And the article itself has all of the vagaries usually of different thoughts as far as the economic calendar for that week and what we see in interest rates and various markets. If you're sort of curious about a weekly note, if you go to the GTC Traders YouTube page and you look at something like the playlists, so you click over at the playlists, come down here, go to the GTC weekly and daily note playlist, look at the full playlist. The first three, maybe even the first four videos really describe why so many firms do this. Okay, so why so many firms have a weekly and a daily note, really what is the value of a weekly and daily note, what it is and what it is not. So that's just for folks who are new. And then, as I will now, I usually yabber on about the vagaries of each week.
So today is April the 16th, 2024. We say this on the intro to each one of these, the little intro we have for folks that are new. We say this there, that the weekly note is just copied from my private prop firm, right? We just lift it and copy it there. So the text was actually from yesterday, and I know I'm getting this out Tuesday. So the text is from yesterday with the exception of Bitcoin. Bitcoin, we just switched over to a bearish stance on Bitcoin literally today. So yeah, just keep in mind there may be a little bit of a delay from when you see it because it's always lifted from what we typed up on Monday. All right, here's obviously SOFR. We have SOFR. It's pausing. Although we are in the, I'm just calling it higher for longer plus camp. That's a lot easier to say than, the little funny higher, right? Just we're higher for longer plus camp, right? A rally to cheaper yields would not surprise me. When you were looking at something like the first red, yes, this is the first red. So the first red being June 2025, a rally to cheaper yields is not going to surprise me. You get that, and I want to talk about that a little bit here. You get rallies in a downtrend, right? So although we are in the H4L plus camp, some sort of rally, especially off of the structure that we're at literally right now, at 94 or 95.43 half would not surprise me. Okay, we've gone risk off, right? So sort of our broad model has us risk off. Let's talk about that for a second. I would say, and I think it's best to keep in mind the larger context when you're doing something like hedging, right? Everything is periodicity dependent. I sort of crack up sometimes when I'm hearing guys argue back and forth on, oh no, I'm a bull, oh no, I'm a bear, on Twitter or X or whatever we're calling it now. They'll sit there and argue and have these big wars. It's like that conversation is meaningless unless you define your periodicity. That's like, if you notice on the weekly note, we always define the periodicity for these stances is 0 to 15 days. And we said that in the very first the first four entries on the weekly note playlist that we have on YouTube. It's like, listen, you got to define your periodicity. And like the periodicity of the weekly note and what we're saying there is anywhere from like 0 to 15 days. Like today, today, for like the next 15 days, this is sort of our stance, which is malleable, which can change. We do adapt to what the market's doing. So my comments here are going to be very, very, very dependent on periodicity. But I would say that if you're going to be looking to hedge in the larger context of what's very obviously an uptrend, you have to do so very carefully. Hedging is, and I'm going to give you a freebie here, right? This is something I would generally, if we had a course, I would put it in a course. Take into context the larger context of the market And hedging like equities, right, is the one area where I will scale in and add units as the thing moves in our position. So in other words, what I'm saying here is we've moved down. It's like, all right, now it's time to press the shorts, right? Just get in there and slam them short. I'm not saying what works for everybody else. I'm just going to say what works for us. We have not found that to work out so well, all right? Because then you get a pause. Markets do what they've done, right? Markets rally, they stop, they backfill, they resume trend, they stop, they, backfill, they reverse trend for a little bit, stop, backfill, and then reverse trend, right? Markets do what they've done on the periodicities that we're discussing. So I'm just gonna say, if you go in there now, like I've heard some people's like, yeah, I think I should short the market. I'm like, now? You're seriously gonna do that now? Hedging longer term investment portfolios, and like we have longer term holds, right? Those stocks that we are just holding. We have found it best that if you're gonna hedge them, come up with some sort of hedging scheme where you do so and you add units as you're proven right. Just hedge a little bit, wait. You're gonna get some backfill. I don't know if it's gonna happen here or where, but backfill generally happens. And I just don't think I think if you want to just be yanked around and whipsawed by the market, sure, go ahead in there and just short with everything you got now after a rotation down like we've just had. Wait for the backfill. Then our own approach is like, wait, and what do you get in the backfill? What do you see? What does it look like to you? Are you seeing weakness in the price action? But I've heard comments from folks that it's like, oh yeah, I'm gonna get some money and I'm just gonna get in there and I'm just gonna short it all, right? And it's like when it comes to, again, I'm just gonna say it in review here, when it comes to hedging longer term portfolios in a larger uptrend, right? You've got a larger rally going on. That is the one incident where at least our approach is that's where we scale in and add to our short position that's hedging the longer term portfolio gradually, right? Because what many people will know what happens. It stops, it backfills, and then it resumes trends and rallies, and nobody can make head nor tails of it, and we can't make heads or tails of it. But I do know that if you hedge a little bit, you've started the process. And what that's going to do, like we just had that major slide, right? And everybody's like, oh, that's cool, you were hedged. I was like, we're hedged a little bit. Don't be surprised to see more of that down the road if this continues. Right? And if it doesn't continue, then it looks really good. Quite frankly, there's some metrics professionals sort of follow, like what's your daily volatility during this time period look like? What's your that's just it. Like, what does your volatility look like during these downtrends? And you can pull out all your downtrends, and it's like, oh wow, your volatility doesn't look that bad. It's like, yeah, maybe because I'm going for good-looking Sortino. But it'll make those numbers look better, right? It's like baseball. It's like it'll make those stats better. So we're hedged a little bit. We're hedged a little bit on that downturn. If you've bought good value, that should protect you anyways. Deep value, the way we do it. And then we're just gonna wait and see what happens. It's not like, oh yeah, these guys are bearish equities. And remember, I'm gonna remind you of something else. 0 to 15 days. 0 to 15 days were bearish. That says nothing about a periodicity of 2 months. That says nothing about a periodicity of a year. That says nothing of periodicity of 3 years. Right? Those stances will be different. The next year, I'm probably neutral on equities. Right now, 0 to 15 days, we're bearish. What's the context? What's the periodicity? What are you talking about? And again, just in review, when we hedge and you see us hedge, we build the short position judiciously. Add a little bit. All right, let's wait. Let's see what happens with that. It's improving daily volatility numbers for our longer term holds. It's softening the blow there. We get some backfill. Does that backfill look weak? What are we going to do with that? How are we going to add? That sort of thing. Okay? So just come up with some sort of scheme. I've heard new and aspiring folks just talking about I don't know. We've just never, ever found it works well when you just flip fully at the end of a long rotation, quite frankly. I mean, seriously, you want to short now? You want to press your shorts now? Why would you do that? That just doesn't make sense to me. We rally up to 51.20. We rally up to 51.30, 51.40. Okay, what's going to look like there? I don't know that it will. If not, we're hedged, and we've got our own scheme for adding units to our hedge. So, anyways, I think I've yabbered on long enough on that. That has been just our thoughts surrounding the weekly note and sort of markets this week. Very light week economically. And yes, literally, I would say just in the last few hours, we have turned bearish on Bitcoin. So we'll see where that goes. We're always willing to adapt. But for now, all of this has simply been what it always is. Just our thoughts, and our thoughts are always good until they're canceled. And have just been our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.